Hi everyone, I'm Rajiv Dixit, your portfolio manager. Today, I want to start with a simple math problem for you. Here it goes. If you put $1,000 in a bank account that pays 0% interest, what will be the value of that $1,000 in 10 years from now? A, $1,000, B, $1,017, C, $820. For those of you who answered C, $820, you get an A+ for remembering the concept of real rate of return. For those of you who answered A, $1,000, the trick word you missed was value. You were right. The balance on your account will be $1,000. But what will be the value of that $1,000 10 years from today? For those of you who answered B, 1017, you are our most optimistic client, as I made that number up from thin air. So, what is the real rate of return, you ask? The real rate of return is the return on an investment after accounting for taxes and inflation. In simple terms, real rate of return is the return on an investment minus the inflation rate. So if you are only making 0% interest on your bank account, the inflation rate will eat away on the value of your money, and you will end up with less than what you started with in value. Inflation is important, and it can affect all of us and our portfolios. What is important to know is that inflation in itself is not a bad thing. In fact, reasonable levels of inflation is actually a good thing, as it shows that the consumer is spending and the economy is growing. The problem happens when inflation starts to rise above reasonable levels. So, what is a reasonable level of inflation? Well, for our economy, the United States, that is, the Federal Reserve has defined a reasonable level at 2% or lower. Other countries might have different expectation of reasonable inflation. Now, for those of us who were too young to pay attention to inflation levels in the late 70s or the 80s, we do not have any real-life experience of what high inflation looks like. That is because last time inflation got a bit out of control in this country was in the late 70s or almost the entire decade of the 80s. Since then, the Federal Reserve has done a reasonably good job at keeping inflation in check. Then why are we talking about inflation? Because even though we have a good ride of reasonable and low levels of inflation since the 90s, recently, the expectation of higher inflation has significantly risen, and in my opinion, for good reason. Let's talk about that. Why inflation could rise above reasonable levels in the near future. Well, things are sort of setting up as a perfect storm for inflation. In my last quarterly review, I had talked about the unprecedented $5 trillion stimulus spending that the federal government did in the last 12 months or so. Remember that? That is a lot of money that needs to run through our system. Money that will increase the demand for goods and services. Now you know from your basic economics class that when demand goes up, prices usually go up as well, unless supply can keep up. If we all want the same orange, we are more likely to offer more money to have it, as long as we have more money to pay for it. The only reason the price of orange is not going up is if Wegmans suddenly comes up with all the oranges that we all need at the same time. Simple, right? So coming back to the point I was making, there is all this new money that consumers can spend and the same amount of goods that they can buy, right? But wait a minute, hasn't production of goods been shut because of the global pandemic? So there really isn't as much goods available as before. Plus the tariff war and the shutdown of shipping. So what we are left with is a lot of money in the system, a lot of consumers willing to buy, but less goods available to sell? Want to guess what happens to the price in the near term? Yes, that's right, they're going up. Thus, a good chance that the high inflation level of the 80s can be back upon us in the near future. The bigger question is, or as they say, the $5 trillion question is this inflation a one-off event that lasts for a short period of time till the money runs through the system and the manufacturing catches up? Or it is a cyclical event that lasts for years and decades to come? Honestly, I do not know if this is a one-off event or a new cyclical trend that lasts for decades. But what I do know is that if inflation is on the horizon, we need to be prepared for it irrespective of how long it will last. And by being prepared, I mean in our portfolios. Inflation can have a major impact on your portfolio if it is not managed properly. Remember the real interest rate conversation from the beginning of the video? From an investment point of view, high inflation levels can negatively affect both bonds and stocks. Thus, keeping a vigilant watch on inflation levels and managing the exposure to assets that will do well in high inflation is very important when you expect such a perfect storm. I want you to know that we are keeping a close eye on inflation. We are preparing the portfolios for a possibility of higher inflation levels by doing things like buying some exposure to gold, by changing the type of bonds we buy. We are actively doing things to protect us, as such is reasonably warranted at this time. I say this because lately there is a lot of noise out there about inflation. I need you to understand how your money is being readied for such an event. What I'm hoping you will take home from this video is this. Inflation is not bad, but high levels of inflation can be harmful to your portfolio and the value of your money. There are good reasons this time to worry about inflation going up. We do not know whether it will go up for a long time, like decade, or just a short duration. We, as your portfolio managers, have a vigilant eye on inflation levels and have started to build a strategy to manage such an event if it happens. Keeping your money at 0% in the bank for long durations is never a good idea, unless it is your emergency fund. I really hope that this was both fun and useful synopsis of inflation and how it is evolving as a discussion in today's times. Please do not forget to subscribe to our YouTube channel if you haven't already done so. Thanks for watching.